Hey everyone, hope you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to do our daily technical analysis update of commodities, work our way through the dollar, yields, precious metals, and commodities ETFs that I follow. If you need help with anything, check out finding-value.com. We have a community there. We've got a Discord channel. We do question and answer updates on the weekends and midweek updates during the midweek. That's where I share more freely my opinions about individual companies and sectors. We still have a coupon code going on May Day if you're interested. 50% off the first month for the monthly memberships and only the first month. And you have a much larger discount on the yearly membership if you're interested in signing up for a year. Go ahead and do that. All right, so let's dive in here. Let's take a look, see what's going on today. We're starting with the DXY. This still looks toppy to me. I don't see the structure for the big move higher in the dollar. Generally, when I see structure, we get a reversal candlestick and then the big green guy shows up. That would signal to me that we are going higher. We get this type of structure, these big green, we'll call it expansive candlesticks, and those generally lead the move. It's an imbalance between sellers and buyers. That hasn't showed up yet. And the opportunity for this to roll over is still there. Doesn't mean it will, but it can still roll over. The momentum's downward. We had a reversal candlestick here. We are looking for the follow through move, and it really hasn't been that impressive. So it could still roll over, and or we could still get the big green candlestick signaling a move higher. So it is still in flux at this exact moment. The thing that drives the dollar up and down is generally interest rates. So when we look at interest rates, those look to be falling. We have eclipsed the lower support level, and we very well could see this move lower. What is causing this move? The 2-year generally front runs what the Federal Reserve does, the Fed funds rate. It is the insiders or banks front running what the Fed is going to do because they know before what the Fed is going to do. They know beforehand and they front run it. This still looks like we could see lower yields and the markets are front running potentially the Federal Reserve doing some sort of rate cut either soon or somewhat soon. The 10-year yield also falling. We are seeing that move lower and playing with this support level. We very well could see this fall. What does that mean? Why does it matter? Well, it means that if the 10-year falls, that's generally what mortgage rates follow. It's the 10-year. If we see it fall, we will see mortgage rates most likely fall. And then what we would see is we want to go look at home builders and a lot of these sectors that are sensitive to the 10-year yield falling. If we see them moving up, then we're seeing money position in the markets front running the Fed and probably what the Fed's going to do, probably banks, insiders. You'll probably see them positioning in home builders, in regional banks, because if yields drop, their bond portfolios would go up in value and they can make more loans in the system if the yield curve uninverts. It's all kind of tied together. And then the 30-year also fell, but this isn't as weak as the shorter end of the curve. This still looks pretty strong. I still think this could go in either direction. And this is also more of a play on what people think about inflation out in the future. So this may go up while the short end goes down. And I know that seems a little bit weird, but that is a possibility still. TYX TNX ratio, I watch this because I don't think this end of the curve is as manipulated as the short end. And when this goes up, that is generally a tailwind behind precious metals. It doesn't mean every day. It doesn't mean it's 100% correlated. What it means is that when we get these moves higher, gold generally goes up with it. The longer term R squared linear regression analysis type move, not the day-to-day movements every single day. But those should also correlate quite well. When this does uninvert, generally we see gold go up. So we had a uninversion, which means it went up, and most of the time gold goes up with it. Bond prices are up today, and we're still in this downtrend squeezing channel. If we break higher, which to me it looks like we could, that means that bond price is going up, yields are going down. It also means that when yields generally go down and we see an uninversion of the yield curve, that's generally when we see a slowdown in the market. That is historically what has been the outcome. 2-year yield, this is something that I do watch. This is the 2 and 10, the 2-year versus the 10-year. This curve is still inverted. We haven't hit that 1-to-1 relationship, which is a little bit below this support level I put in there. If we see this fall, that increases the risk of a potential fallout in the markets. Every single time we've seen this fall, 2000, 2001, that also correlates with, you know what that was? September 11th, 2001, and the crash. These false flag events, they somehow always correlate somewhere. COVID's over here. This is 2007, 2008, September 11th. I mean, the bond market knew before that was going to occur. Maybe. I don't know how they know that, but some sort of false flag event does occur when this comes down, and it's as if the banks knew it occurred before it occurred. Kind of weird. We've got gold up $32. Remember about that ratio I was talking about? There we are. We've come on back to some degree. The tailwinds are behind us. It is weird that we had such large selling pressure moves in the face of the yield curve uninverting and rates going down. I would have thought this was shooting up. But I think Powell has stated before that he doesn't want an uncontrolled move in gold. Maybe there's something related to this move going sideways here, even though the market conditions do look ripe for this to go higher. Silver is pulled back, and we have a small update, but the momentum's still to the downside at the moment. But the bigger, longer-term view still looks fantastic for a move higher. We've broken out of all these big support levels, and this might just be a return move back to the breakout. Platinum up a little bit today, but the momentum is still down, and that hasn't turned yet. And then palladium down a little bit too. We're right still at support in the 800-ish, upper $800 level per ounce. GDX up, GDXJ up, SILJ up. Now, they all have the same chart. Some are underneath resistance, some are above resistance. The big boys are above resistance, the smaller ones are below. And momentum's still lower. We have not turned yet. XAU to gold ratio still looks good longer term and can go higher where gold and silver mining companies will outperform gold. And I still think that will be the case given the market conditions that we're seeing in yields, the uninversion of the yield curve, and the unemployment rate. Crude oil down 1.88%. We have been moving sideways here. It still looks like we are moving sideways. Yeah, we had a down day today. We did have some support here. That's why there are wicks at the bottom of the candles. We're bouncing off support in that 77-ish dollar range. TTF gas up 4.75, trying to break through that resistance level. And then natural gas in America is down, and the momentum is still lower at this time. We could not make the turn there. The momentum's still lower. We do have support at that one, almost right where we're at. Almost right where we're at. And I can extend this across almost right where we're at there. Our boy XOP, yeah, you know me, it didn't get the phone call that oil was down 1.8, 1.9%. It actually ended higher. So we are still holding strong in the oil equities, and money is rotating into it. This is a retest. It's actually a good time to enter. In my opinion, we're also at support of the neckline here. Now, if oil continues to go lower, that could weigh on it, and we very well could roll over. We have to watch oil, see what this looks like over the next few weeks. OIH, which is the energy service company, is also getting some bids today, up 1.37%. I know the rig count was up a little bit, and we are above a lot of these support levels. So it still looks good. A spot to really focus on and look at would be this kind of resistance level right where we're at. We do have a lot of resistance coming through at this stage there that we'd like to break through and ultimately break through that level at 359, 360. Newcastle coal futures up about 1%. I think this looks fantastic. Downtrend here, breakout, and we are losing that momentum. It's starting to go sideways, and I think it will turn up at some point here in the future. Ruffles Uranium Trust up 3.6%. Not looking too bad. Still underneath some resistance that we got to basically eclipse and get above. Still bearish at the moment with the momentum heading lower, but it's going to give it its effort here and see what we can do. URA up 2.23. Momentum is still down. We've broken the big uptrend, and we could see a return move and then a move lower, which is possible. URNM, same thing, same situation, and URNJ, exactly the same. So don't get too bullish if we were to do something like that. We got to get back above that resistance trend line at about $25 share on URNJ. Still looking a little bit weak. Momentum's down for copper, and we've got a lot of support in that 385-ish area. COPX up 1.5%, but the momentum is still lower. I would be patient and see if this thing turns. We've got iron ore down just a little bit, and we are trying to put in that double bottom. Longer term, we've got good support at about $100. $100. Aluminum up a little bit. We're at support, and we'll see if it holds, but the momentum is still lower. We got to turn that momentum, get it sideways, and then turn it back up eventually. Nickel down 1.5. It's looking pretty weak. I wouldn't jump in front of that train. Let it deflate. Do not jump in front of it. Don't catch the falling knife. You're about to get cut. Mu up 1%. Now this looks pretty good. We've got support, a bullish engulfing, and we are starting to break through that resistance trend line right here. So we're looking good for Mu. Some of those companies like Fertilizers and other areas, I would say it doesn't look too bad for a potential entry point. Emerging markets, it likes the weaker dollar, weaker yields. We're back closer to support. That's why we have a wick at the bottom there. We'll see if we can get a little bit of liftoff here to the upside. That's what we're looking for. KRE up 1.73%. Remember, weaker yields, weaker dollar. Boom, front running the potential lowering of interest rates. That's what we're seeing here. KRE, TAN, lower interest rates up 1.66%. Still down in no man's land. Lithium up 1.56, still an ugly looking chart, and we're getting close to that support level at about $36. REMX up 2.16%, momentum still lower, has not turned. Patience is a virtue here. Baltic Dry Index down a little bit, but we are now at that 30-year support level, and it's going to be a strong one. Actually, it's all the way back to 88. 88! Oh, yeah, 30-something, 40-year support level. We've got XHB. Remember about interest rates, the 10-year going down, mortgage rates potentially pulling back. We're up 3.35%. This has been a rocket ship, almost like insiders know what's coming before it comes. Russell 2000 up. Money rotation breaking out of this consolidation to the upside looks pretty good, feels pretty good for the Russell 2000, and breaking out of this longer term support level. Looking good. SPX up 1.11%. Momentum still down, not turned. Now, could this be a potential top? I don't know. But right now, doesn't look pretty. NASDAQ also. Momentum down. We are coming to support. We'll see if that support holds or if we have a fallout. A lot of people on Twitter saying that this thing's going to crash, but you know, there's a lot of crash bros out there. We'll see. if this actually materializes here in a move lower. So we'll watch it together. SMCI is up, but again, we have eclipsed the support level. Momentum still lower. That, to me, guys, does not look like a strong chart if you were asking me. It's looking pretty weak. NVIDIA up 0.7%. Momentum is still lower. I would not jump in front of this train. Two big bearish engulfings. Momentum's heading lower. We'll see if there's the follow through to sell this thing off or if it can turn this thing around. Bitcoin up 3.88% or 3.89. It just changed on me. We've got resistance through here if I were to move that up and support down here. So we're still in this pattern here, flag pattern. Ethereum also working sideways. I can put this like that, perhaps that. Something on the lines of that is what I see. And we're still looking all right. It's holding on at this time. Bigger picture view, could this be a potential top or return? It's too early to say that. We'll see. We got to get some strong selling pressure in there for me to turn ultra bearish on it. But that's what I've got for today, guys. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website. Mayday coupon code. Don't forget, we've got a Sunday question and answer session, 5 p.m. Mountain Time. You can ask me questions directly if you're part of the community, part of the website. And yeah, we'll go over some things, a lot of data going over on Sunday. We can go over the strategies again, and maybe even I'll make some mentions of the individual companies and why I own some of those companies. So you can kind of follow and track some of the way the plays of what I'm looking at and what I think could materialize in the future. But that's what I've got for today. We'll catch you next time. This is Finding Value.